Hello and welcome. This is W. Murray Bradford, CPA, publisher of Tax Reduction Letter at Bradford Tax Institute. Today, I want to talk to you about your mileage log. The mileage log is what you need to get maximum business mileage. It's the official method for measuring business miles. When you boil down the rules on percentage of business use, the only acceptable method for measuring business miles is the mileage log. You are probably watching this video because you were reading the article at the Bradford Tax Institute titled, "What is the Unpardonable Sin in an IRS Audit?" In that article, we explained why the lack of a mileage log is a big red flag for the IRS, and how your failure to have a mileage log can substantially increase the scope and depth of your audit pain. As a subscriber to Tax Reduction Letter at the Bradford Tax Institute, you're well aware that the courts cannot give you a vehicle deduction when you are missing a mileage log. In other words, should you arrive in court without a mileage log, you can simply kiss your vehicle deductions goodbye. To make this crystal clear, think of that lack of a mileage log as putting you in the IRS guillotine. Obviously, this is a very uncomfortable position, and the result is not too good either. Here's what an excellent mileage log looks like. First, it has your mileage notes next to your appointment and actions. In this 7 a.m. entry, we are driving from our principal office to our other office. In this case, the principal office is located in our home, and this eliminates commuting to our outside-the-home office. We note the 11 miles as business miles, and simply insert the B next to the 11, indicating business. You have 5 types of mileage for tax purposes. That's what the letters at the top, BRI, PC, are for. We will elaborate on that in a moment. Next, we drive to our business appointment with Joe Johnson, and then we have lunch with Bill Smith at Moe and Gary's. We note the mileage and business purpose next to each stop. Note how crystal clear this mileage record is. Imagine a good impression this makes on the IRS. In many cases, this ends the audit right there. On the way home, we pick up groceries and note the personal stop. In this case, no personal miles because the grocery store was simply on the way home. For the day, we have 62 total miles. Now we put the miles in the 5 categories: business, business residential rental, investment, personal, and commuting. The business residential mileage is for rental properties that you rent as dwelling units. This mileage counts as business mileage, but it does not count for purposes of Section 179 expensing. Thus, we need to know this percentage. Next, we circle the vehicle number used this day and also record the ending odometer and beginning odometer. This record is perfect. The odometer readings tie to oil changes and repairs. We write it down on a timely basis, meaning within a week. We have other corroborative evidence like emails from the appointments and the lunch. This mileage log takes only minutes a day to actually complete. It's a great way to audit-proof your records. You can keep this mileage log 365 days a year, or you can use one of the sample methods that we mention in the various articles at the BradfordTaxInstitute.com site, like the 90-day or 3-month sample and the 1-week-a-month sample. As a subscriber at Bradford Tax Institute, you have subscriber resources that include the tax diary system that we used for this mileage log. You can print the tax diary page as part of your subscription. In fact, you might check out those tools because they also contain the Section 105 medical plan documents and Section 127 educational plan documents, among many others. This has been W. Murray Bradford, CPA, publisher of the Tax Reduction Letter at the Bradford Tax Institute. Thank you for being with us.